This crash is going to cause a lot of clarity to form there.
Welcome to Dream Richer. The worst nightmare for every crypto investor is seeing your favorite investment hit the red color. Every dip scares the living soul out of you. The whole financial market, ranging from stocks to bonds to crypto, all saw an almost bearish crash over the last month. But what if the crash served a hidden purpose no one fully appreciates as of yet? Today, the inside man and billionaire playboy Michael Saylor answers the tough questions. As he argues, this crash was much needed, even though most investors may not be happy with the recent crash. However, over the next couple of months, we will see very positive results stem out of all this. Simply put, this will create order out of chaos. Some of the things we will begin to see over the next few months include a more educated society that appreciates crypto, and hence boosts its adoption. And most importantly, we will begin to see more regulation enter the market, which will drive large banks and whales, like JP Morgan and senators, to approve crypto. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
And if you'd asked 1,000 people what's the difference between UST and Tether and Circle, they couldn't tell you. But that would be the three examples, right? Sort of Tether's in the middle, Circle's on one extreme, UST's on the other side. This crash is going to cause a lot of clarity to form there. First, the community is getting educated, right? I bet you everybody in the crypto community today knows the difference between a dollar in the bank and UST. Mm-hmm. And I bet you they have an intelligent conversation about the difference between Circle and UST and the business model of the two. We saw last week, Tether had to redeem billions and billions of dollars of Tether, and they could. So they could. If you'd actually tried to redeem $7 billion of UST in a couple of days, well, people tried to do that and they couldn't. So I think the industry got educated, but also I think that there's a lot of people that would like to issue stable coins, like Caitlin Long's bank would like to issue stable coins. And if you look at the banks like Silvergate and Signature, they're FDIC insured banks, but they can't issue stable coins. And if you look at JP Morgan and Goldman Sachs and Citigroup, they can't issue stable coins. So I think that if we just take the example of stable coins, that crypto crash and the UST crash has simultaneously educated the existing crypto market and all the investors. It's also introduced, the concept of risk. Not everything is equal, right? There are 19,500 things on coin market cap, but they're not all equal. So to say, well, this is risk-free or that is, like they all have different flavors of risk, but how do you assess the risk?
One of the founding principles of cryptocurrency is that it's decentralized and unregulated, but the US government isn't too worried about crypto's founding principles. In fact, cryptocurrency regulation has been a frequent point of interest lately for US lawmakers and government agencies. A recent report from the Biden administration outlines proposed legislation that would bring more regulation to the cryptocurrency market. And in recent months, U.S. Federal Reserve Chairman Jerome Powell and Security and Exchange Commission Chairman Gary Gensler have both expressed concern over lack of cryptocurrency regulation. Here are a few key themes that the new cryptocurrency regulation will address. These include stopping cryptocurrency crime and tax evasion, stablecoin regulation, and the potential for investment vehicles like crypto ETFs and other funds.
I think that the industry is getting more sophisticated. I think the regulators now have some pressure. The Secretary of the Treasury was in a congressional hearing with Senator Toomey, and he's been an advocate of some stablecoin legislation. And he asked, "Sir, you think we need to get it done this year?" And she said, "Yeah, I think we can and should get it done this year." So the consensus among the regulators and the politicians is, yeah, we probably need to do this. Then you're going to see people like, let's say David Solomon was on CNBC. He's the CEO of Goldman Sachs. Well, whatever Goldman Sachs thinks is probably what JP Morgan thinks and Citigroup thinks and Bank of America thinks and Wells Fargo thinks. So what he says is, yeah, we know the crypto economy's here to stay. We can't custody it yet. We're afraid to custody these assets. His actual words were, we're not allowed to. And if I speak to CEOs of publicly traded companies and banks, like publicly traded banks, they'll say, our regulators won't let us. So you see the conundrum here, which is you could either stay in a regulatory gray zone where there's about 1% of the money. If you can be 1 or 2% of what you're going to be, and you can stay in the gray zone. Or you can create a clear public policy framework, and then you move into this compliant zone. And when Goldman Sachs and JP JP Morgan entered the space, they'll issue $500 billion of stable coin, trillions of dollars. And so you'll go from 150 billion to 1.5 trillion. And when they start issuing in that size, you'll see Amazon and Google and Microsoft using stable coin for international remittance and corporate remittance. And then you'll see it get built into Apple Pay and Google Pay and Amazon as payment method. I think that this is going to accelerate that regulation. It'll accelerate the regulation of the crypto securities, and which are many of them are unregistered securities, and there's no disclosure. It'll accelerate the regulation of the exchanges. It'll accelerate the regulation of the stable coin. And in the near term, there'll be a shakeout. You know, some things, when you look at them in the light of day, you'll say, for example, what's a shakeout? I decide I like Circle better than I like UST. That's a shakeout, right? And it'll also create an on-ramp for institutional intervention.
It's clear from Michael Saylor's explanation that the crash may have been a blessing in disguise. A more educated society and regulated crypto is bound to stem out of the crash we just experienced. Despite these benefits, there are other benefits of a market correction that must also be considered. For example, whenever a crash hits, it bounces back up with great power. The Great Recession of 2007 and 2009 was one of the longest bear markets we've had to endure, but it turned into one of the biggest, longest-running bull markets of all time. So investors need to keep downturns in perspective. Hence, a flash crash, or market correction as we call it, is much needed and healthy for the market. Do you agree with Michael Saylor? Will we see positive results over the next few months? To learn more about the latest crypto news, watch these videos here.